Hello, future educators. Have a good day and welcome to our video discussion on GE2 Reading in the Philippine History. By the way, I am Isha Gintapan Paras, one of the reporter in Chapter 5, Filipino Cultural Heritage. It is my pleasure to discuss to you the topic about banking. As you watch and listen my video discussion, I hope you'll gain a deeper understanding about banking, especially here in our beloved country, Philippines. So sit back, relax, and please listen my discussion carefully. What is banking? Banking is the business of protecting money for others. That means banking involves various services centered around managing, safeguarding, and lending money. It encompasses activities like accepting deposits, providing loans, facilitating transactions, and offering financial advice. Essentially, banks act as custodians of individuals' and businesses' money, ensuring its safety, liquidity, and growth through various financial instruments and services. Let's focus on Philippine banking system. The Philippine banking system is composed of universal and commercial banks, thrift banks, rural and cooperative banks. First is universal and commercial banks represent the largest single group resource-wise of financial institution in the country. They offer the widest variety of banking services among financial institutions. Ang mga universal at commercial na bangko ay pinakamarami at pinakamayaman na grupo sa mga institusyong pinansyal sa bansa. Sila ang nagbibigay ng pinakamalawak na iba't ibang serbisyo sa larangan ng bangko kumpara sa ibang institusyon sa pinansyal. Ang mga ito ay may malalaking halaga ng yaman at nag-aalok ng iba't ibang serbisyong pinansyal tulad ng pautang, pag-iimpok at iba pang serbisyo na kailangan ng mga tao at negosyo para sa kanilang pangangailangan sa pinansyal. The following are the universal and commercial banks in the Philippines. ABN AMRO, Philippines, Al-Almana Islamic Investment Bank of the Philippines, American Express Bank Manila Branch, Asia United Bank Corporation or AUB, Australia and New Zealand Banking Group or ANZ, BDO Unibank Inc., BDO Private Bank, a subsidiary of BDO Unibank Inc., and last is Prince Bank at marami pang iba. Second is the thrift banking system. It is composed of savings and mortgage banks, private development banks, stock savings and loan associations, and microfinance thrift banks. Thrift banks are engaged in accumulating savings of depositors and investing them. They also provide short-term working capital and medium and long-term financing to businesses engaged in agriculture, services industry, and housing, and diversified financial and allied services, and to their choosing markets and constituencies, especially small and medium enterprises and individuals. Ang thrift banks ay nagbibigay ng pautang para sa maikling panahon para sa pang-araw-araw na pangangailangan at pangmatagalang pundo para sa mga negosyo na nasa agrikultura, serbisyo, industriya at pabahay. Bakit short-term ang thrift banking system? Dahil ang kanilang focus ay karaniwang nakatuon sa mga maikling term na pangangailangan ng mga individual at maliit na negosyo tulad ng pang-araw-araw na gastos, working capital, at iba pang maiksing term na pangangailangan sa pundo. Bagaman sila ay nagbibigay din ng medium at long-term financing pero mas kilala sila sa kanilang mga serbisyong pang maiksing panahon. The following are the thrift banks in the Philippines. BPI Direct Banco, Philippine Savings Bank, PS Bank, Robinsons Bank, East West Bank, Philippine Business Bank or PBB, is rural and cooperative banks. Rural and cooperative banks are the more popular type of banks in the rural communities. Their role is to promote and expand the rural economy in an orderly and effective manner by providing the people in the rural communities with basic financial services. They provide financial services to the farmers, fisherfolk, cooperatives, and other rural enterprises. They also help in mobilizing savings and investments in the countryside and in supporting the government's programs and policies for rural development. According to the Bangko Sentral ng Pilipinas, there are 429 rural banks and 25 cooperative banks operating in the Philippines as of December 2020. These banks have a total of 2,547 branches and 1,038 other banking offices nationwide. They also have a combined assets of 308.9 billion, deposits of 215.6 billion, and loans of 177.8 billion. While rural banks are privately owned and managed, cooperative banks are organized, owned by cooperatives or federation of cooperatives. The following are the rural and cooperative banks in the Philippines. Agribusiness Rural Bank Incorporated, Aliaga Farmers Rural Bank Inc., ARDCI Bank Inc., a rural bank, ASPAC Rural Bank, Aurora Bank, a microfinance-oriented rural bank, Balanga Rural Bank Inc., Banco Dipolog, acquired by Producer Savings Bank Corporation, Banco Laguna Inc. Obra Pias Pious Works. Banking in the Philippines began in the 16th century by establishment of this organization composing of laymen associated with religious order. Rodriguez Bank was among the first bank that emerged in the early 19th century, which was more of a loan association than a regular bank. Now, let's proceed into the history of Philippine banking system. Banco Espanyol Filipino de Isabel II was the first state bank in the Philippines that was established on August 1, 1851 by the Board of Authorities, Junta de Autoridades, in Manila because of the need for more extensive bank services and facilities. In January 1, 1912, the name was changed to Bank of the Philippine Islands. In 1906, Postal Savings Bank was put up and it was the first agricultural bank. Later on, its assets and liabilities was transferred in 1916 to the Philippine National Bank. 3 years after the American regime ended, the Central Bank of the Philippines was created, establishing a managed monetary system in the Philippines. It was given the sole authority to issue the Republic's new paper money and regulate and supervise the country's banking system. In 1873, British-oriented banks opened branches in the country as a result of the expanded Philippine-European trade following the opening of the Suez Canal in 1869. In 1872, the Chartered Bank of India, Australia, and China opened branches in Manila and later in Iloilo and Cebu. In 1875, the Hong Kong and Shanghai Banking Corporation established a branch in Manila. Monte de Piedad Waikaha de Ahorses was the first mutual savings in the country. A unique combination of savings bank and pawn shop opened in 1982 was provided initial capital by the Obras Pias. The bank was then renamed Monte de Piedad and Savings Bank. Now let's proceed in creating the Central Bank for the Philippines. During the Commonwealth period, 1935 to 1941, the discussion about a Philippine Central Bank that would promote price stability and economic growth continued. The country's monetary system then was administered by the Department of Finance and the National Treasury. The Philippines was on the exchange standard using the US dollar, which was backed by 100% gold reserve as the standard currency. In 1939, as required by the Tidings-MacDuffel Act, the Philippine legislature passed a law establishing a central bank. As it was a monetary law, it required the approval of the United States President. However, President Franklin D. Roosevelt disapproved it. due to strong opposition from vested interests. A second law was passed in 1944 during the Japanese occupation, but the arrival of the American liberalization forces aborted its implementation. Shortly after, President Manuel Rojas assumed office in 1946. He instructed then Finance Secretary Miguel Cuaderno Sr. to draw up a charter for a central bank. The establishment of a monetary authority became imperative. A year later, as a result of the findings of the joint Philippine-American Finance Commission chaired by Mr. Cuaderno, the commission, which studied Philippine financial, monetary, and fiscal problems in 1947, recommended a shift from the dollar exchange standard to a managed currency system. A central bank was necessary to implement the proposed shift to the new system. Immediately, the Central Bank Council, which was created by President Manuel Rojas to prepare the charter of a proposed monetary authority, produced a draft. It was submitted to Congress in February 1948. By June of the same year, the newly proclaimed President Elpidio Quirino, who succeeded President Rojas, affixed his signature on Republic Act No. 265, the Central Bank Act of 1948. The establishment of the Central Bank of the Philippines was a definite step toward national sovereignty. Over the years, changes were introduced to make the charter more responsive to the needs of the economy. On 29 November 1972, Presidential Decree No. 72 adopted the recommendations of the joint IMF-SEBI Banking Survey Commission, which made a study of the Philippine banking system. Thus, in the 1973 Constitution, the National Assembly was mandated to establish an independent central monetary authority. Later, PD 1801 designated the Central Bank of the Philippines as the Central Monetary Authority, CMA. Years later, the 1987 Constitution adopted the provisions on the CMA from the 1973 Constitution that were aimed essentially at establishing an independent monetary authority. The administration that followed the transition government of President Corazon C. Aquino saw the turning of another chapter in the Philippine central banking. In accordance with a provision in the 1987 Constitution, President Fidel V. Ramos signed into law Republic Act No. 7653, the new Central Bank Act on 14 June 1993. The law provides for the establishment of an independent monetary authority to be known as the Bangko Sentral ng Pilipinas, with the maintenance of price stability explicitly stated as its primary objective. This objective was only implied in the old central bank charter. The law also gives the Bangko Sentral fiscal and administrative autonomy, which the old central bank did not have. On July 3, 1993, the new Central Bank Act took effect. First Bank in the Philippines. Bank of the Philippine Islands, or BPI, is the country's second largest bank, trailing only Metropolitan Bank and Trust. It is also the Philippines' oldest bank and one of the oldest of all Asian banks. BPI offers a full range of commercial and retail financial services, including corporate finance services, asset management and brokerage, and other financial consulting services. BPI's retail network includes more than 700 branches throughout the Philippines, as well as branches in New York, Hong Kong, and Tokyo. The bank also operates a network of more than 1,200 automated teller machines and more than 8,500 retailer-based point-of-sale machines. In 1999, BPI pioneered online banking in the Philippines with the launch of Online Bank BPI Direct in 1999. In addition to its banking products and services, BPI has also developed a strong non-life insurance operation, chiefly under subsidiary BPI MS Insurance Corporation, listed on the Philippines stock exchange, BPI has long been majority controlled by Philippines conglomerate Ayala Corporation. Founding Asian banking history in the 19th century, a first attempt to establish a colonial bank came in 1828 when King Ferdinand VII called for the creation of a public bank in the Philippines. Yet, the actual formation of the bank did not occur until the middle of the century under the auspices of then colonial governor Antonio de Orbistondo y Aguila, who took up his post in 1850. Orbistondo established the bank the following year in the Royal Custom House in the fortress town of Intramuros. The bank was named El Banco Español Filipino de Isabel II in honor of the reigning Queen of Spain. Joining the bank's policy board was Antonio de Ayala. The Ayala family and the later Ayala Corporation were to remain intimately related with the bank and with the Philippines' industrial development. As the first and only public bank in the Philippines and perhaps the first public bank in all of the Southeast Asia, El Banco Español Filipino de Isabel II was granted the authority to issue the first paper money in the Philippines. That operation started in 1852 when the bank issued its first pesos fuertes or strong pesos. Expansion and diversification in the 1980s. In 1982, BPI began preparing for the deregulation of the Philippines banking industry, which enabled it to transform itself into an expanded commercial bank. As part of that effort, BPI acquired Commercial Bank and Trust Company, which specialized in the middle market in 1981. The growing bank then moved to enter the investment banking field with the purchase of Ayala Investment and Development Corporation in 1982. BPI's relation with Ayala also enabled it to add an international component that year when it took over Ayala International Finance, based in Hong Kong. BPI made two more significant purchases in 1982 when it acquired Philsic, boosting its new investment banking wing, and Makati Leasing and Financing. The latter purchase helped strengthen its own leasing arm, which was launched in 1980 and made BPI the first Philippine bank to offer leasing facilities. BPI by then had expanded its operation into the Philippines' rural areas after acquiring People's Development Bank, which also held a strong agribusiness-based loan portfolio in 1984. That purchase enabled BPI to meet new government requirements stipulating that agribusiness loans make up at least 20% of a bank loan portfolio. The People's Development Bank acquisition formed the basis of BPI's new subsidiary, BPI Agricultural Bank. BPI continued its acquisition burst into the mid-1980s. In 1985, the company added Family Bank, at the time a major mortgage and savings bank in the Philippines. Renamed BPI Family Bank, the new subsidiary grew into one of the country's leading consumer lending banks. Also, in 1985, BPI stepped up its international component with the purchase of Asian International Bank, based in New York. That office was later converted into a full BPI branch, Bank Assurance, leader in the new country. Alongside its acquisition campaign, BPI displayed its penchant for being the pioneer in various banking areas during the 1980s and early 1990s. In 1981, the bank became the first in the country to offer access via automated teller machines or ATM. 2 years later, BPI extended its ATM network to include its Express Teller System, the first in the country to provide 24-hour access to banking services. Then, in 1987, the bank introduced the Philippines' first debit card system. BPI's next technological innovation came in 1991 when it introduced its express banking centers. Typically located in shopping malls, BPI's express banking centers operated as mini banks, providing a more limited range of services than full-service banks. Nonetheless, customers were able to open new accounts as well as apply for credit cards and home and car loans. And that's how banking shaped the history of reading in the Philippine history, leaving a legacy of financial growth and prosperity. That's the end of my discussion, and I hope you learned something. Thank you and God bless.